Dell was one of the big stories of the market yesterday. What do the charts say? What to do now? Should you go long? Should you go short? Let's look at the charts and figure it out right now. So this is the chart of Dell. And by the way, if you're asking yourself why the F is he wearing a baseball hat? Well, it's because it's Thanksgiving. It's college football rivalry week. If you're a big college football fan like me, it's one of the best weeks of the year. And also, my two universities are playing for the playoffs. University of Georgia, Arizona State, two huge games. University of Georgia playing the nerds of Georgia Tech. We're gonna beat them. We're gonna make them cry all the way until they have their next Comic-Con this weekend. It's gonna be awesome. But what was also made people cry was the performance of Dell yesterday. Look at this massive drop all the way down to the 200. This is the purple line, is the 200 SMA moving average after earnings that beat on the earnings side but missed on the revenue side. And that's the problem when you have stocks that have run up as high as Dell has. The second you start missing earnings, things get really, really tricky. This is the chart right now of Dell, and this doesn't look good at all. You see this wedge pattern right here. We didn't even make it all the way up to the end of it, and we broke down from it significantly. Highly likely that we're going to confirm this breakout. What does this mean? Well, this means that this whole fall move up in Dell is nothing more than a bear flag, a B wave, if it's A, B, C, whatever you want to call it. It all means the same. It means with the break, which we have right now, there's going to be another leg lower coming, and it should at least get down to the old lows, probably go lower. So we're at the 200 now. What do we do? Well, as you can see, we're kind of in a pickle because we're in the middle of nowhere. We have this big support zone coming up that has been significant. We have to expect that we're at least going to get a bounce once we hit this. We have this monster gap up here, but there's no reason fundamentally for the stock to fill this right now. However, if we do a retrace to the scene of the crime, which is quite possible and happens quite a lot, this could coincide with a closing of the gap. That would be the ideal time to short Dell. But we also have to honor the 50-day moving average. As you can see, the 50 has been extremely reliable. It basically always led to the stock moving up in the direction if it's above or below it. Right now, we used to be above it. Now we are below the 50. We're right at the 50. So if you use moving averages, there's always a certain amount of times that the stock goes below or above it and then reverses. So we need to wait and figure out what the Dell stock is going to do right now before we're going to make a decision to go long and short. The one thing that we do know is there's no reason for us to go long right now. All right. We saw a major dump, big volume spike. You see it down here in Dell yesterday. That means the institutions just threw the stock out. They don't want to have it in the year-end reports to show their clients. They don't want to be in it. The whole hardware sector has cooled off significantly. You know, the chip sector is having problems right now. In the AI trade, the AI party moved to the software sector. That's the new hot club on the AI street. So there's no reason for us to buy. The only reason why Dell would move up significantly right now is a short squeeze. That's it. So we don't need to go long right now. If we want to go long, we want to wait if it forms a bottom in this support area for a quick rebound. But I prefer, as I showed you right now, in the long-term time frame, now clearly the downside. However, we sit right in the middle of both the support zone and the old breakout area with the open gap. So this is not a great place to short it, but keep an eye if we somehow move up to this area here, 232 to 33, or maybe even close this gap. If this happens, that then is our short opportunity for sure. Or if it confirms the break of the 50, you can start adding a position if you're a high risk investor. I wouldn't do it because we have the support zone right below it, so the risk reward is not very attractive. If we short Dell up here, the risk reward becomes highly attractive. So that's our scenario with Dell. Now you might be saying, and this is important, well, Helmi, you basically told me to stay away. Yes. And you know what? In 80% of the cases of the charts that you see for a trade, you should stay away. This is one of the big mistakes that retail investors make. They just start jumping into stocks because they want to trade. Let the trades come to you. And if it's not there, then it's not there. We now looked at the chart, we analyzed the chart, we know where the areas are, where this trade gets interesting. It's not interesting right now. Let's focus on other trades that are more interesting. And don't overtrade just to make something happen. That's really important. So staying away is actually great advice. And I don't want to say that it's because I'm such a genius. No, I learned that from Wall Street myself. Jim Rogers, legendary investor, he taught me personally that this is one of the great lessons that I took from him. So that's it for today. Oh, one more thing. You guys know this is a small grassroots operation. We're just starting out with this channel. We're growing it. We're giving you guys free value, and we love doing it. Me and my business partner, Chris, we work really hard. This is side business for us, but we love to invest our time to give you guys analysis of the financial markets and the charts and trading opportunities and trading wisdom and experience. I've been in the market for over 20 years, and as they say, if you're in a market after 10 years, you've done something right. So I would ask you to do us a small favor in the meaning of Thanksgiving and giving. Please tell one friend, one family member, hell, tell someone you don't even like to subscribe to the channel to help us grow. And as a thank you, once we reach 1,000 subscribers, I'll do a special off the books show called Drinks with Dan, casual, where we're going to talk about the markets, about life, about college football, about the stocks that you guys want to talk about that I usually don't cover here in the regular videos. That's our thank you, giving back to you for giving back to us. Thank you very much, and go dogs, beat the nerds.